Look, I think the market is underpricing the change in Washington. That's actually surprised me. I know that Bitcoin ripped from 70 to 100K, but I think the change is much greater than that. The reason for that is I think unless you worked in crypto over the last 4 years, you can't imagine how challenging it was. You sound crazy when you say that banks won't take your, $10 million deposit. People are like, no way.
Did that happen to Bitwise?
It did happen to Bitwise.
Welcome back to the show. Joining me this week is Matt Hougan, CIO at Bitwise. I've been wanting to talk to you for a long time. Your firm puts out and your department puts out such good research. So thank you so much for joining me.
Thanks for having me. I'm so excited to be here.
Well, we have a lot to talk about. First, I want to start with just Bitcoin adoption at sort of the corporate institutional level, since I know you follow that so closely. Zooming out, just what's your perspective? Like, how do you see this whole landscape right now? Are we moving in the right direction? It seems like more and more companies are starting to adopt Bitcoin.
Yeah, I would say it's going well and we're still early.
Okay.
So whether you look at institutional adoption, pensions, endowments, family offices, financial advisors buying Bitcoin, or corporations putting Bitcoin on their balance sheet, we've seen early movers in both spaces. So on the institutional side, it's something like 10 or 20% of financial advisors now own some Bitcoin on behalf of clients, but there's still 80, 90% to go. On the corporate side, they've been held back by weird accounting rules that made it almost impossible for companies to buy Bitcoin, but they still bought hundreds of thousands of Bitcoin last year. Even at this early stage, though, both of those two markets, institutional adoption or corporate adoption, is buying more than all the Bitcoin mined every year, which makes me very optimistic on where we're going. But we're still maybe inning one, maybe inning two. That's about where we are.
I keep seeing tweets from people in your company that are meeting with a ton of wealth advisors, like hundreds of them traveling across the country. What are those meetings like and what are those conversations like?
Yeah, so we do something like 15,000 meetings with wealth advisors a year. So we
Wow.
have a large number, we have a large team, and I do a bunch of meetings. So we do webinars. I probably spoke to 1,000 this week through webinars or one-on-one meetings. I would say that they've changed remarkably since the election. So prior to the election, Bitwise had done well. We've been around for 7 years. We'd gone from 0 to about $1.5 billion in assets at the start of 2024.
Wow.
We're now at 12. So to give you a view on like the scale of adoption, I think we're a good proxy for that growth. Before the election, and certainly before the ETF, it was mostly asking questions about what this is. How does Bitcoin work? Why does it have value? What about criminal use? What about the environmental impact? It was more a learning exercise. Since the start of ETFs in January 2024, and particularly since the election removed the reputational risk, it's more about implementation. How much goes into a portfolio? Should I rebalance it? Should I buy it all at once or average in over time? How do I build a crypto sleeve? Is it just Bitcoin or should I buy companies as well? Those are the kind of questions. It's not everyone by any means, but there's a noticeable shift and a noticeable uptick in allocations.
Here's something I'm surprised by. I thought that after the ETFs were approved and they launched, that pretty much every wealth advisor was going to, at that point, start recommending Bitcoin. I mean, this is the best performing asset of the last decade. But I've even recently met with wealth advisory firms, and they say, their wealth advisors actually own Bitcoin themselves, but they can't recommend it to clients. They can only talk about it or start to allocate when the client comes to them and says, hey, can we do something with Bitcoin? Can you shed light on that? I don't understand.
Yeah, that's absolutely right. I think it's a really important point. Think of it like a nuclear key situation. You have to turn two keys in order to set something off. The same is true in an ETF. You need the ETF to be approved by the SEC. And then these big wealth management platforms also have to agree to let their advisors talk to their clients. I know it sounds crazy, but that's the way it works. And whether it's Morgan Stanley or Wells Fargo or Merrill Lynch, or many of the largest firms haven't done it yet, even 13 months in. So we're in this very weird situation. And we do surveys on this at Bitwise. We ask how many financial advisors own Bitcoin in their own personal account. And the numbers are more than 50. And then how many are allocating to client accounts? And it's like 15 to 20%. So there's this big gap where advisors are doing something with their own personal account that they can't talk to their clients about. Now that's going to change. And it's going to lead to, more flows into the ETFs and more uptick. But right now, I would say, fewer than half of all financial advisors in the US can even have a proactive conversation no matter how much they love Bitcoin, they can't bring it up with their
That's
clients.
crazy to me
It's
because they
crazy.
have such a fiduciary responsibility. So who makes those decisions exactly? Are you making progress on that? Essentially, you're going there, you're educating them about Bitcoin, and then all of a sudden they put it to a vote, and then all of a sudden their wealth advisors can recommend it?
It's more or less exactly as you described. So at these large national account platforms, there'll be a committee, a due diligence committee with a handful of people, and they have to give the green light. And the thing about due diligence committees is all you need is one person to say, yeah, but what about? And then it gets kicked to the next meeting, which is 3 months later. I will
Of
say that
course.
it's been a big change because we've been working with these committees for the past few years.
Mhm.
I was recently doing a tour through the middle of the country. Previously, when we would meet with these groups, it would be like two relatively junior people. At these recent series of meetings, it was 10, 12, 15 senior people. So that tells me that we're getting close. So we will get there.
Coin Stories is brought to you by Genius Group, a Bitcoin treasury company listed on the NYSE under ticker GNS. Genius is on its way to hodling 1,000 Bitcoin in its treasury while educating the world on a Bitcoin first future. Genius is launching the Bitcoin Academy with courses from Safety Namoose, author of the Bitcoin Standard. Join the launch waitlist via the QR code on the screen or the link in my show notes and receive the weekly Bitcoin Treasury newsletter. Plus, get a chance to win a whale pass to Bitcoin 2025 in Vegas. Genius isn't measured in IQ, it's measured in BTC. Next up, a quick word about my friends at Bitwise. They've been educating investors on Bitcoin for more than 7 years, have over $10 billion in client assets, and a team of 100 plus. They openly publish their Bitcoin wallet addresses and donate 10% of their ETF profits to open source developers. Check out their 30 plus products at bitwiseinvestments.com. Remember, crypto trading involves significant risks, including the loss of your entire investment. Don't forget to join me in BTC Vegas this May and attend the 4th annual Women of Bitcoin brunch. Use code HODL for 10% off your pass. Tell me something, when you go to these meetings, what is their level of education of Bitcoin, and maybe what are the frequent questions that come up? Because I think that a lot of people even watching this, maybe they're a Bitcoiner, but they want to orange pill their company or
Right.
their wealth advisor. What are the questions that you're getting from these massive institutions that have a lot of capital?
Yeah, it's a great question. So actually, some of it is very specific due diligence questions. So questions that maybe traditional investors don't think about. Things like custody
Yeah.
and trading and liquidity, because they have these 30-page documents that they have to fill out to figure out that there are no hidden risks in that market. But away from that, they want to know the same thing people know. They want to know, how do you value Bitcoin, right? Why is it worth more than zero? And then they want to debunk all the FUD that you've heard over the years, whether it's criminal use or governments banning it, et cetera. But the big one is, why does it have any value at all? And I think you can convince them of that, but it takes time and it's a process.
Well, how do you value Bitcoin?
Well, I do. My favorite view of the value of Bitcoin on a long-term basis is to look at the size of the market it's going after. I think Bitcoin is well on its way to disrupting gold. That's a $20 trillion market. I think it's going to be used for international transaction and cross-border transactions. That's another many $trillion market. And then you can divide that by the number of Bitcoin and you end up with a target amount. At Bitwise, we think it's going to cross $1 million by 2029.
Mm.
I think from a shorter term perspective, you can just look at supply and demand in the market,
Yeah.
right? The big criticism of Bitcoin is the price is set by supply and demand. But that's also a real benefit when you're in a market like today, where again, we're producing 160,000 Bitcoin a year and ETFs are buying 500,000, right? Something has to give. And I think what gives is price resistance, and ultimately it goes higher.
I think every pension fund should be allocated to Bitcoin. When I was a reporter, I covered just how so many of these pension funds are essentially underwater. It's so sad. But I heard actually, and I'm curious if you could tell me if this is true, that let's say there's a pension fund interested in allocating to Bitcoin. They actually have to go out and meet with a consultant for the consultant to do due diligence on Bitcoin. And that could take months and months. And if the consultant says, no, you shouldn't invest in it, then they just pass on it. Is that true? Are there gatekeepers?
It's mostly true. Yeah. So, I mean, the deep institutional investor market is a market with tier after tier after tier, because those people want their jobs. And if it goes wrong, they want someone to point at and say it was their fault. That said, we've been working with a number of consultants for a significant number of years.
Mm.
And many of them are already allocating. That's why you're starting to see this bubble up through the end. I'll add one more thought from an institutional perspective, because I think people overlook it. Crypto's a $3 trillion market right now. If you have a 0% allocation to crypto, you're effectively short.
Yeah.
Right. When we talk about people allocating 1 or 2% to Bitcoin, that's just to get to neutral.
Mm-hmm.
And I think institutions are starting to recognize that. Once you accept it as part of this pie, you need to have at least a little bit, or you're making an active bet against it. And they're not comfortable doing that either. So I think you're going to see this 1-2% thing really take off at the institutional level over the next few years.
So when the ETFs were approved, it was like all these horses coming out of the gate, and it was a big competition, which one was going to be crowned the king. And that's what all the, ETF analysts would talk about. Can you share a little bit more as now a year has gone by, where Bitwise is at? Is it difficult to compete with like the BlackRock ETF? Just talk to us about the competition within the ETFs.
Yeah, absolutely. We don't think of BlackRock as competition, actually. I'm very glad BlackRock is in the market. They've helped substantially grow the market. They've made the pie much bigger. They've certainly gathered a huge amount of assets. We're really happy having gathered, $4 billion into BITB. We're happy that we're 20% cheaper than BlackRock. We're really serving a different market. So they're serving mostly a traditional market that doesn't know that much about crypto. We're serving crypto specialists and people who want to work with a specialist manager. Some of the other smaller players I consider more direct competition, but I love that BlackRock is in the market.
Well, interesting.
All that said, it's hard, right? This is an extremely competitive market that's benefited people. These ETFs are extraordinarily cheap. Our ETF is 20 basis points, 0.2% per year, which is half the fee of the largest gold ETF. I mean, we've raced to a rock bottom, incredible deal for investors. So it's a little bit painful for me, but I think it's great for all the people who are buying.
For those watching who may be confused why an institution would allocate to one of the ETFs as opposed to just buying spot Bitcoin, what do you say?
Yeah, often actually it's just flat cheaper is the reality. So even if you'd have to be investing billions of dollars to get institutional custody, institutional audit, institutional tax, and institutional trading for a price of 0.2% per year. I mean, the beautiful thing about ETFs, the promise of ETFs, is every investor can invest on the same terms as the largest investors in the world. So one reason institutions buy the ETF is it's actually probably the best deal going. The second is you have, years and years of professional expertise, right? At Bitwise, we've been managing crypto assets for 7 years. We've lived through hard forks. We have relationships with 9 liquidity providers. So we're sourcing Bitcoin at the lowest possible cost. And I think that's just a great package for these investors. It's the easy button, but it's also the most efficient way to allocate. And that's why you're seeing the huge growth.
Isn't there some change coming to the regulatory front with regard to in-kind redemptions? And is that a big deal?
It's a good thing. I think it's not quite as big a deal as the market makes it out to be. It will make the ETFs marginally more efficient.
Okay.
And it will let existing investors possibly in kind into the ETF, which is a more tax efficient. We'll see about that. But it's a marginal improvement. Look, most ETFs operate in kind. I was the CEO of ETF.com before I came to Bitwise. So that's my background. It will make it marginally more efficient, but they're already an incredible deal.
Oh, interesting. You've been tweeting recently about stablecoins.
Mm-hmm.
You think that stablecoins are going to be adopted on a massive scale. Why do you feel that way?
Well, I mean, 3 reasons. One, the underlying technology is just better, cheaper, faster than existing payment rails, right? I can move a stablecoin faster from my cell phone than Jamie Dimon can move from his penthouse office. So that's a pretty good deal, right? 2, it's a national priority of the United States under the Trump administration to make stablecoins a big deal. And I think when the US puts its weight behind a new technology, I'm optimistic for that. And the third is that international money movement is just terrible. It's painful. It's slow. The fees are too high. And I think that's going to be significantly disrupted. I actually think there's a fourth I left out, which is all of Wall Street wants in on the stablecoin boom, right? They see Tether making more money than Goldman Sachs.
It's crazy.
And they want a piece of it, right? That does not sit well at Goldman Sachs headquarters when a company with 130 people is printing, $13 billion in profit.
Right. It was like 14 billion versus 13 billion.
Unbelievable, right?
That was wild to me. But it brings up an interesting point because Tether just moved to El Salvador, right? And I would assume that the United States wants these companies issuing dollars, essentially,
Yep.
digital dollars, to be based in the US and under sort of the purview of the government, right?
Yeah, I think we're going to see. There's an argument in the stablecoin legislation around how that should be structured.
Uh-huh.
At the end of the day, I'm not sure we want to turn our back on an entity that's like the 15th largest holder of treasuries and growing very quickly. We sort of
Right.
need that pulse. So I actually hope it's open and decentralized. I think US companies will win because a regulatory aura around the efficiency of stablecoins will be an incredible offering. But if someone abroad wants to start a company that issues US-backed stablecoins, I say more power to them. Look, I think we're not that far from most retail cross-border payments being done in stablecoins. I think that will end around to domestic payments being done in stablecoins. And I think this market will be $1 trillion in 2 years, maybe 5-10 trillion shortly thereafter. It's a killer app, right? Who knew? Look, Bitcoin is non-state money and it's going to be incredibly important. But the other killer app that crypto has introduced into the world is exporting US-based financial rails globally. And I think it's just going to happen so much faster than most people imagine.
This episode is brought to you by Casa, the leader in Bitcoin self-custody solutions, helping people like me secure their wealth with simple, powerful multi-key vaults. And now Casa is here to help businesses and even governments do the same. Introducing Casa Business, a secure, easy-to-use 3-key vault designed for small and large businesses with team signing capabilities and a web dashboard. Start your Bitcoin treasury the secure way and protect your assets. Get 10% off your Casa plan at casa.io/Natalie. If you use Bitcoin, you need a wallet that's fast, simple, and packed with features. That's why I love Speed Wallet. Send and receive Bitcoin or swap Bitcoin and stablecoins instantly. Shop gift cards, play games to earn Bitcoin, and explore mini apps. Download Speed via the QR code on the screen or the link in my show notes and use referral code CoinStories10 for 5,000 free sats. Next up, the Bitcoin way. Bitcoin is only freedom money if you control it fully. The Bitcoin way can help you learn the skills to properly secure your Bitcoin in 100% self-custody with zero counterparty risk. Go to thebitcoinway.com/Natalie to speak one-on-one with the best experts. Your security and sovereignty are priceless, so don't gamble with your future and peace of mind. Well, to your earlier point, it's fascinating how much demand they've provided for the US Treasuries, which obviously America cares about.
Right.
But have you followed the conversations about whether or not the stable coins could be mandated to potentially hold more longer term treasuries because they're so concerned about the 10-year? But when I heard Paolo Arduino from Tether talking about this, he's like, no, we want to hold the short end. We just want the bills. How do you see this playing out?
Yeah, I mean, I hope they're allowed to hold the bills. If they're forced to hold the longer dated treasuries, then
They're
the
not
government,
liquid.
they're not liquid. The government will be forced to come in with the things it does for banks,
Yeah.
which is 100%ing, treasury bonds that are trading at 85 cents.
Mhm.
That puts the burden back on US taxpayers. That's effectively us subsidizing this industry. Let's just let the market be free and sort it out just fine, right? These are supposed to be daily demand deposits. It should be short-term treasuries. If you look to the traditional markets, the equivalent to stablecoins is money market funds.
Mhm.
They actually can't own anything longer than 13 months,
Right.
Just for this specific
Mhm.
reason. I'm not sure, I would be more in favor of that regulation than this reverse of pushing them out the curve. We can't ask crypto to solve every problem that the US government has. And I think this is one where we should just let the free market be the free market.
So would you agree that the priority right now in Washington, D.C. is stablecoin regulation and not so much the strategic Bitcoin reserve? And what do you think are the chances of that happening?
Oh, great. Yeah, I think the priority is first stablecoin legislation.
Mhm.
There's bipartisan support. It's demand for the debt. It exports dollar dominance. That's an easy win. Then crypto market regulation, because I think there's a huge push for clarity in how that's set up. And then for a Bitcoin strategic reserve. I think the probability of us not selling the coins that we seized in 2014 is
That's higher,
100%, basically 100%.
Mhm.
I think the probability of us buying 200,000 Bitcoin per year is relatively low, 10 or 15%. But I will say it's not priced into the market at all. And one more thought about that. The most important thing, in my view, is not actually the government aggressively buying, although that would be great. It's that we've gotten past the point where the government is going to try to shut down Bitcoin.
Right.
And to me, that's an existential change. That means there is a pre that happening market and a post happening market. And we're now on the other side of that. So if we buy, great. If not, also great. Bitcoin's going to be just fine.
Yeah, no, I absolutely agree with you. Let me ask you something a little more contrarian, because we're talking a lot about dollar dominance. We're hearing it a lot from the new administration. But Bitcoin is both this powerful savings technology and a store of value, and it's also a very fast and powerful currency.
Mhm.
Why do we need any country's currency as opposed to just this neutral global settlement payment rail that is Bitcoin?
Yeah, well, I think eventually it's going to have that role in the world. I think it's going to be used, sort of piecemeal. The challenge with that argument, for what it's worth, I think people always think, how do we get from here to that future?
Yeah.
Right? I think the answer is it's used in situations where we want a non-political currency to transact, maybe between countries that don't love each other, can't agree on a rail. And I think we'll see that in the next 5 years. Ultimately, governments are powerful. They're not going to zero. So they're going to want their own currency. My great hope for Bitcoin is it puts constraints on those fiat currencies. They're not allowed to be abused at the extent that they have been in the past, because if they are, the people will opt out into this new ecosystem, right? And so whether they do or not, Bitcoin will be very important in making the world's money sort of safer, better, et cetera.
That's well said. When you look at the research that's out and you meet with all the folks you're meeting with, what's something that's really surprised you in maybe the last couple months?
Oh, what's something that's surprised me? It has surprised me. Look, I think the market is underpricing the change in Washington. That's actually surprised me. I know that Bitcoin ripped from 70 to 100K, but I think the change is much greater than that. I look at what's happening, not just in Bitcoin, but in DeFi, even in alt layer ones. And I think the market is just underestimating the change. The reason for that is I think unless you worked in crypto over the last 4 years, you can't imagine how challenging it was, right? You can't understand how difficult being debanked regularly was in this ecosystem. You can't understand how difficult multiple subpoenas and lawsuits were. You sound crazy when you say that banks won't take your $10 million deposit. People are like, no way.
Did that happen to Bitwise?
It did happen to Bitwise. It happened to everyone in crypto, of course. We all faced banking challenges. When Bitwise was first formed, it was difficult to get people to accept our checks from VCs to start the business, which is an incredible fact. But unless you realize just how repressive it was, you can't imagine what it will be like now that that's lifted. You look at what's happened at the SEC recently, pulling back on the Coinbase lawsuit, pulling back on the Uniswap lawsuit. I think just the rebound for that is 2 to 3x more than we've seen in the market so far. So I guess I've been surprised that people haven't sort of felt and intuited that difference. But now I recognize it's because they didn't know how bad we had it. And so therefore, how open the market is now.
Yeah, so it's a good buying opportunity.
I think it's a great long-term buying opportunity. I saw a tweet yesterday from a Vichel from Electric Capital that said, opportunity is fundamentals minus perception. And the opportunity has never been greater in crypto if you use that math.
What do you think people should be paying attention to as the next catalyst for getting Bitcoin to maybe that next price level?
Yeah, that's a great question. I think it's going to be, there's a slow, steady drip. So unfortunately, that's not a one-off catalyst. But every time the Bitcoin 13F filings come out and they show that the scale of institutional adoption has gone from 14 to 18 to 29, it's going to 50 or 60. That's going to be another signpost that we're moving there. Every time you see another company say it's putting Bitcoin on its balance sheet, that's going to be another sort of pebble in the pond that lifts the tide. So there's going to be a lot of this sort of slow turn. I think if maybe there's, if we do see more sovereigns come out, I think maybe that could be the spark or catalyst. But I think it's more of a slow bull market. Actually, I wrote about this week in my CIO memo. I think the challenge the market is facing right now is all the short-term news is negative, and the long-term news is incredibly positive.
That's so true.
And so it's so easy to focus on the short term. So I don't know if it's one catalyst. It's just like the tide slowly coming in on Bitcoin, which I think is what's happening.
How do you think about Bitcoin fitting into sort of this macro landscape that does feel uncertain for a lot of people, right? Inflation is still structurally higher than they want it to be. There have been some tremors in the bond market, nothing crazy. We see pullbacks, we see a lot of volatility. Some people think there's going to be some massive deflationary bust. Others think that liquidity is only going to go higher because they have to keep spending. How should people look at everything that's going on that feels like there's so much risk in general and then position Bitcoin in that?
Yeah, I think you have to look at the market and say it's more volatile or open or uncertain than it has been in the past for exactly the reasons you called out.
Yeah.
Macro prognosticators are all over the map on
And
what they expect.
geopolitics, yeah.
Yeah, runaway inflation, runaway deflation. Where are you?
Mhm.
I think where Bitcoin fits is you need a hedge. You need a thing that opts out of that system and that is steady, producing blocks all the time. Maybe it's not 100% of your portfolio, but if it's zero, then you're 100% exposed to this mess.
Mhm.
And maybe people should think about having a little bit that's not exposed to that mess.
So Michael Saylor says, never sell your Bitcoin. I think Trump even came out and said that, never sell your Bitcoin. But look, we have money because we want stuff, right? We want what the money can buy us. We want the nice house and the vacation. So do you see a future where people are going to be borrowing against their Bitcoin or their holdings in the derivatives? I mean, what do you see the future look like so that people don't have to sell their Bitcoin?
Yeah, I mean, I will just say from our client perspective, we see a lot of people coming to Bitwise and trying to generate income on their Bitcoin. Large Bitcoin holders who, whether they want to stake
Hmm.
in the emerging staking ecosystem, or they want lending, or they want to write derivatives contracts against that, they're asking us, how do I generate 3, 4, 5, 10% yield while still having exposure to Bitcoin? And so we work with them on those solutions. But I think it's what you're pointing to. I don't think people are going to want to part with their Bitcoin.
Right.
Yes, exactly. Also, I would note the people who have bought Bitcoin to this point have strong conviction.
Hmm.
I don't think, they get played as weak. I don't think they're weak hands because you had to step out of the mainstream to do so. And you only step out of the mainstream if you're confident. And so I think we're going to have a lot of people who want to hold on to this. So you'll see a rise in lending markets. You'll see a rise in carry trade. You'll see a rise in staking on Bitcoin. I think all of that's going to happen.
Were you expecting the ETFs to be as successful as they were?
No, no. I was expecting the ETFs to be successful, but they were so much
Crazy.
more. It's so crazy. Before the Bitcoin ETFs launched, the most successful ETF of all time gathered $5 billion in its first year. That was the ceiling. ETFs did 37, right? 37 is so much more. I was optimistic they might do 10,
Yeah.
right? I thought it was going to be huge. We had worked on it for like 6 years. So of course we thought it would be huge, but $37 billion is crazy. All that said, I bet we do 50 this year. I think people, if they think it's like this bell curve and down we go, it's not. Every ETF almost in history that's been a success does more in year 2 than year 1, and more in year 3 than year 2, and more in year 4 than year 3. For the reasons we started talking about at the beginning, half of the market can't even buy this thing yet, right? And the other half is just learning. And the people who bought it in the first year are probably going to double down. Think about the first time you bought Bitcoin. Do you own more today than you owned then? Or is your holdings, of course you own more. Like that's just the direction of travel. So I was blown away, but I think this year will be even bigger.
That's so bullish. That's great to hear. Let's talk a little bit about your backstory. You said you ran ETF.com before Bitwise. Just talk to me about your journey a little bit.
Yeah, sure. So I spent about 12 years running a company called ETF.com. It was a data, media, and events business in ETFs. Here's the crazy thing about ETFs. Today, they're like the apple pie of investing.
Mhm.
Everyone loves them. Low cost, John Bogle, diversified. They're plain vanilla.
The first thing I learned about was SPY.
SPY.
I was learning about investing in equities.
Exactly. The amazing origin story of ETFs is that wasn't the case. In the early days, people hated them. People called them EFTs. The Financial Times called them weapons of mass destruction.
No way.
Yep, you can find it. There were congressional hearings about whether ETFs were destroying the American dream.
Why?
Because they were challenging entrenched incumbents.
Interesting.
And people were worried about index investing, and they were worried about liquidity mismatches, and people hated them. And the largest financial firms refused to participate, right? They were slow to adopt. It was
just
all
like we're
up.
seeing with Vanguard and Bitcoin.
It's exact. Vanguard hated ETFs as well. And now they're one of the largest providers in the space. I raised that because, the reason I looked towards crypto in part after I sold that business was I saw the same thing playing out. You had this incredible technology that lower costs, that's more fair, that's better for people. And you had an industry that said, this thing is terrible, ridiculous, congressional hearings, et cetera. And just like ETFs went from a few hundred million to today, 15 trillion, I think crypto is going from, a few hundred billion when I joined to probably 15, 30 trillion as well. So it's the same story.
Fascinating.
hmm
Well, it's been so great to talk to you. I hope you come back on the show. Any final thoughts or anything we didn't cover that you really want to share with the audience?
I just think it's an incredible long-term opportunity. I know there's a lot of short-term news and short-term volatility, but if you look at the long-term trends of institutional adoption, corporate adoption, better regulation, the government not stepping in to ban this thing, I think it's an incredible long-term chance.
That sounds great. Well, I hope everyone follows you on X. We'll link your profile and the work you do with Bitwise. Thank you so much for joining me.
Thanks for having me.
Thank you so much for checking out this episode of Coin Stories. Make sure you're subscribed to the show so you don't miss any new episodes. If you can, turn on those notifications and leave us a positive review. They really help the show grow organically with new listeners. We have a free weekly newsletter. Sign up at thenewsblock.substack.com. This show is for educational and entertainment purposes only. Nothing should constitute as official investment advice, and you should always do your own research. I'm always open to feedback and guest suggestions, so please feel free to reach out at info@talkingbitcoin.com. I'll see you next time.